Hey, you are welcome to my YouTube channel. Today, we're breaking down exactly what you need to do right now. We're going to talk about how to not only protect yourself but also set yourself up for massive future gains. Let's get into it. Here's the situation. The market is tanking, whether it's from inflation, rising interest rates, or global instability, it doesn't matter. The stock market is taking a hit. And the question on everyone's mind is, what now? First off, let's be real. Market crashes are part of the game. They happen, and they'll happen again in the future. If you've been paying attention to how the market works over the years, you'll know this is just a phase. Warren Buffett's famous quote comes to mind: be fearful when others are greedy, and be greedy when others are fearful. Right now, people are fearful, and that's where the opportunity lies. So, what's the biggest mistake people are making right now? They're panicking. People are pulling their money out of the market, selling at a loss, and essentially locking in their defeats. That's the worst thing you can do. Selling during a crash means you're cementing your losses. Remember, until you sell, those losses are just on paper. The market historically always recovers. Maybe not next week or next month, but it will. You don't want to be the one who missed out on that recovery because you freaked out at the wrong time. Another mistake is trying to time the bottom. Maybe you think you can jump out now and get back in when things look better. But timing the market is incredibly tough, even for professionals. You're just as likely to miss the rebound by sitting on the sidelines. Once the market does start recovering, you want to already be in the game, not scrambling to catch up. So, what should you do instead? If you're invested in solid companies or broad market funds, stick with them. This is not the time to run. Companies with strong fundamentals are built to weather these kinds of storms. If you sell now, you're giving up the chance for long-term growth. But if you hold on, you're giving the market time to recover, which it has done every single time in the past. There's also a key strategy you need to focus on: dollar cost averaging. Instead of dumping all your money in at once, keep investing a little bit at regular intervals, regardless of whether the market is up or down. This way, you buy more shares when prices are low and fewer when they're high, effectively lowering the average cost of your investments over time. It's a tried and true method for navigating volatile markets and takes the emotion out of your decisions. The truth is, right now, there are bargains all over the place. Market crashes are like clearance sales for stocks. Quality companies are being sold at massive discounts, but here's the catch: you need to be selective. Focus on companies that have strong cash flow, low debt, and a competitive advantage in their industry. In other words, the businesses that will not only survive but thrive once the market recovers. Now, here's something a lot of people don't talk about enough: rebalancing your portfolio. Take a look at what you're invested in. Are you too heavily weighted in one sector, like tech or energy? This might be the perfect time to diversify. Sectors like healthcare, consumer staples, and utilities often hold up better during downturns. By spreading your investments across different sectors, you can reduce your overall risk. Cash is also crucial during a crash. If you have extra cash on the sidelines, you're in a great position. You can take advantage of these low prices. But if you're stretched thin, don't put yourself in a risky position just to buy stocks. Make sure you've built up an emergency fund first, so you're not in trouble if things get worse before they get better. Defensive stocks are worth considering as well. These are companies that sell essential products, things people need no matter what's happening in the economy, like food, healthcare, or utilities. They tend to be more stable and even pay dividends, giving you a steady income stream while you wait for the market to recover. Now, the key thing to remember: this crash isn't the end. It's part of the market's natural cycle. While it's tough seeing your investments lose value, history has shown us time and time again that the market always bounces back. The most important thing is to keep a long-term mindset. In a few years, you'll look back at this crash, and either you'll be glad you made the right moves, or you'll regret that you didn't. Make sure you're on the right side of that decision. So, now's the time to make smart, strategic moves, not emotional ones. Don't panic, don't sell everything, and don't let fear drive your decisions. Hold your ground, keep investing, and look for opportunities in the chaos. This is where true wealth is built, when everyone else is running scared. If you found this video helpful, make sure to like and subscribe for more tips on navigating the stock market. Stay calm, stay focused, and I'll see you in the next video.